Hello and welcome. You're watching India and the World on DeKoder. I'm Nidhi Razdan. We are now in the 10th week of the US Iran war, and we've had a very precarious, fragile ceasefire in place for nearly a month now. And the fragility of that ceasefire was on display in the last 24 hours when, for the first time in weeks, we heard reports of the UAE possibly being attacked by Iranian missiles and drones, of a US naval blockade in the Strait of Hormuz, which has led to escalated tensions in that particular waterway, with American ships trying to escort some oil tankers through that crucial waterway. The Americans say that this is a defensive and temporary measure. The Iranians have said that this is a violation of the truce. But it all goes to show how, as I said, fragile the situation really is. And because this ceasefire has sort of existed in a limbo with no real progress as far as peace negotiations are concerned, oil prices have already been under strain. And in the last couple of days, those oil prices have shot up again as concerns mount about whether this ceasefire will actually hold. Now, what does this mean for you and me? What this means is that now that assembly elections in India are well and truly behind us, we should probably expect a sharp rise in petrol, diesel, and cooking gas prices at home. It's already happened for commercial LPG cylinders, but we could now see it hit our own pockets much more directly. It still would have hit us, but this will be bigger. But there are even bigger economic ramifications for India and for the rest of the world. And to talk us through that today, I'm very happy to welcome on Decoder former RBI Governor and economist Dr. Raghuram Rajan. He's joining us from Chicago today. Thank you very much, Dr. Rajan.
Thanks for having me.
I just want to quote to you what you said a few weeks ago, shortly after this conflict began, and that was when the war had actually entered its third week. You said that a prolonged conflict would trigger an unprecedented oil shock, it would destabilize financial systems, and leave oil dependent economies like India particularly exposed. So here we are in the 10th week. Where are we at?
Well, we're uh, at the end of the beginning at this point. What was true in the early days of the conflict was there was a lot of oil on the seas. There were cargoes which were already underway towards their destinations, and therefore, countries had buffer stocks. Now, all three have been eaten into. That the cargoes on the seas, the Russian, the Iranian cargoes, everybody's been bidding for them and trying to attract them to their countries. The cargoes that were on their way to the destination have reached, and countries have been eating into their buffer stocks. Now comes the realization that we're not done with this war, that the negotiations are really very difficult, that you have basically an unyielding Iran against a US that doesn't want to settle for what the Obama administration settled for, wants more. And of course, Iran doesn't want to give that. And right now, we're seeing a process by which the blockade by the US is attempting to bring Iran to its knees. But of course, the government in Iran is not going to bend, given that it feels it can take much more pain than what the U.S. is capable of inflicting, especially given that some of the pain is feeding back into the U.S. through higher oil prices. So um, this can go on for longer. It's very hard to predict when we will get a ceasefire which allow the strait to open, and it's also unclear whether this escalates further. Today, the news is a little better than yesterday, but this could escalate. So, with all that in mind, I think countries have to start thinking about the medium term at this point, and as you said, start thinking about the fiscal consequences of subsidizing oil. Oil prices have gone up and may go up much further to bring about the balance between demand and supply. Right now, demand is still higher than the supply that is available across the world. And especially in East Asia, the difference between demand and supply, in Asia, I should say more generally, the difference between demand and supply is a lot. And that's where
Can I
demand
ask you
destruction has taken
where
place.
you think how high you think oil prices could actually go? At the moment, it's hovering around just above $100 a barrel. It's been a little volatile, but I mean, do you see it going as high as 150, 200, as some had predicted?
I think when it comes to delivery, in some places it's already there. What When you say 100, typically we're talking about futures prices, and that embeds a lot of hope that the war will come to an end, the supplies will start flowing again, etc. When you look at the prices that are sometimes paid, depending on location, it can already reach that kind of level. And see, here's the problem. We have about 20 million tons of oil being produced by the Gulf states. They consume some of it. Some of it is coming out through the Red Sea, and I think eh, all in all, at this point, we think somewhere between 10 to 12 million barrels a day are shut in. And if you look at the price of $100, that has resulted in demand of about 3 to 4 million barrels, demand falling by 3 to 4 million barrels. So it has to fall by another 6 to 8 million barrels. And that will require significantly higher prices. It's anybody's guess, but the numbers that are being touted are exactly what you said, 150 to $200, somewhere there.
If you could explain to us, what are the sort of wider ramifications for ordinary folks in India if this prolongs? I think, some of us have begun to see the strain in terms of shortage of, cooking gas cylinders, etc. But the pain hasn't really hit home just yet. So we're hearing about airlines warning the government that please step in. We may have to otherwise, change our schedules, cut the number of flights. Some European carriers have already done that. So, in terms of the sort of domino effect this could have, what are some of the things that could happen in the next few weeks and months?
Well, first, I mean, take cooking gas, right? Clearly, we're trying to shift towards more cooking gas, which means, the other areas that used gas will suffer. I mean, even within cooking gas, we've made the choice of households versus restaurants. But of course, restaurants employ a lot of people, and that discrimination, so to speak, against restaurants is going to create some amount of unemployment, but also is going to create a lot of shut restaurants if they can't find alternative sources such as kerosene and so on. So that's one example of how it hits. Of course, domestic cooking gas prices will also have to go up to create a little bit of a slowdown in demand amongst households. Now, again, that's going to hit the poorer sections of our society more. Will there be subsidies for them or not? How will that be borne? That's another related question. Take sowing, which is going to happen soon. That the fertilizers are at a huge premium right now, and if you don't apply enough fertilizer at this point, then you have lower crops. In the face of an El Nino, which is supposed to be harder for us, for our farmers this time around, add to that fertilizers are going to be much costlier, much in much shorter supply. That's going to be a problem. Third, I mean, high prices will quell demand, but there will be active shortages also, and that will force some industries to close, which will create unemployment. So these are the kinds of things that will emerge the longer this lasts, because we certainly are dependent on huge amounts of imported oil, gas, and LPG.
You mentioned just a little while ago about the government subsidizing our oil and gas supplies and perhaps revisiting those subsidies. What do you mean by that? Because can the Indian government afford, are you saying, to continue with those subsidies? Is it just becoming too difficult and too expensive?
Well, anytime we fix the price and don't let the price adjust with international prices, there is an implicit subsidy. It's either borne by the oil marketing companies, but then paid for by the government when it gives them some additional benefits, or it's a trade-off over time that you pay for it now, and then later on we keep the price high even when the international prices have fallen. But whatever, I think the point is it sort of feeds into the fiscal equation. If the oil marketing companies absorb it now, that means some of them are in the public sector, that the dividends paid to the government fall, and therefore there's a budgetary consequence. Longer term, you can't keep inflicting it on the oil marketing companies because they have only so much space, and many of them are actually have shareholders amongst the public. So you do have to raise oil prices. So um, I think uh, from a longer term perspective, if this is going to last, the best thing for the government would to do would be to pass on the prices while targeting the weakest sections for support. But supporting everyone is just infeasible, but also prevents them from adjusting. If oil prices globally are twice what they were, you need the owner of a Mercedes to recognize that and reduce their consumption of that, and therefore passing it more widely while helping the really poorer sections of deal with it. I think that kind of strategy has to emerge rather than absorbing the price for everybody and let them consume merrily as in the past.
What do you see though as the impact on the global economy? Is there a misconception, perhaps in America, that this is only going to impact Asian economies more before the impact reaches the US, which is actually not true. You're already seeing gasoline prices have gone up in the US as well. But in terms of a larger, deeper economic impact, is it a mistake to believe that this is only going to hurt Asian economies?
I mean, the world is integrated, right? So it feeds back in many ways. As you said, the prices, unless the US, and this is not unthinkable, unless the US uh, bans exports of oil and gas, prices are going to be what the world prices are, because Europe is competing for US gas and US oil, and so that's going to be what U.S. consumers and industry face. But I think the shortages that emanate from production shortfalls are already hitting other areas. For example, fertilizer prices are very high in the U.S. also, and the U.S. farmer is hurting tremendously. Because of past actions. So I think the U.S. is experiencing some of this, but shortages will show up in other areas. One of the areas is helium. Helium very important for chip production. If we have a longer, drawn out sort of blockage of the Strait of Hormuz, helium flows will affect chip production across the world. And as you know, in this AI investment, chips are going to be very important going forward. If they're constrained, then that means limited AI investment, which is a big factor in US growth. So it will feed back in many ways. The US is not an island. It does link up to the rest of the world. Global supply chains run through the US, and it will show up in those supply chains.
Are you concerned that the world is slowly heading into a recession?
I think that's a very real concern if this if doesn't open up soon, and one of the worries is these things become nonlinear. As soon as you have right now, we don't have huge shortages, we have emerging shortages. But when a factory has to close because it doesn't have enough fuel, that becomes a big issue, because reopening the factory becomes much harder. As you know, in India, one of the concerns is when you close a restaurant, the restaurant workers, if they're from rural areas and they don't find other jobs, go back, and bringing them back is going to be more difficult. Just like we saw in the pandemic. So I think that the spillover effects get worse and worse the longer this lasts, especially because we move from just the factors showing up in prices to it showing up in actual shortages of fuel, which can create much larger effects because they hit all over the place, especially in places which are very critical.
In fact, taking off from that, there's also a real concern, isn't there, that even if there is miraculously some deal and a peace deal and the Strait of Hormuz opens, let's say in a month from now, that the after effects will last for a long time. I mean, we're not going to suddenly miraculously see, prices stabilize, supply chains stabilize right away.
I think that's absolutely right. I mean, take the case of just the oil prices. Will they come down sharply? They may come down on the news of some kind of a settlement, but I think the hope that they'll come down to the pre-war prices in the immediate future is excessively optimistic. Think about what every country is going to do. It's going to start refilling its buffer stocks. As soon as the flows start back again, there will be a worry that this could stop again if tempers flare up once more. And so everybody is going to be bidding for the oil and the natural gas that's on the seas initially to fill commercial stocks, but not long after to fill strategic supply stocks that have been depleted. So filling all that is going to take some time. There is going to be a lot of anxiety over that period, and my sense is we're talking not weeks, not even months, maybe quarters before the oil market stabilizes. Also, the point about production, as this proceeds, production of oil, gas will have to cease because they filled up all the storage in the Middle East. And if production stops, then restarting production can take a longer time. You just don't turn on a switch and the gas
Start.
production starts.
Yeah.
It's a process of starting up. That too can take time. And that feeds through to everything. Fertilizer production will follow on gas production, and that too has startup costs. So supply will not react immediately, and demand will be much higher for longer because of all the factors we've talked about. So prices are going to be higher, which is why it's important to start passing them through.
And do you think this puts a strain on India's GDP growth overall? I mean, we keep hearing the government saying that India's economic fundamentals are strong. We'll weather the storm and so on. Are we going to be able to do that? Is this going to bring down our GDP also?
Well, the shortages will certainly have that effect because factories will stop if the shortages increase. But I think the government is right in that we came into this with a reasonable sort of fiscal plan. Inflation has been relatively low and contained by the RBI. The bigger question is on the external front that foreign direct investment has been low. There has been portfolio divestment. People have taken their money from the Indian markets and gone out. And so my biggest concern is more on the external front because our current account deficit, because of the higher price of oil, we buy all our oil and gas. That's going to sort of flare out. And what is worrying is in the last few you know months, the inflows have been much more tepid even before the war. So we do have to pay attention to that. I don't think it's an immediate. I mean, we have a lot of foreign exchange reserves. I think there is faith in the RBI and in its inflation targeting regime, but nevertheless, we have to navigate a difficult phase when our current account deficit is going to increase while financing flows haven't been so favorable in the last few months. This is a good time for reforms. I mean, I heard the Prime Minister talk about Badlav, and I think we should, at this point, show that we are a country worth investing in, and bite the bullet on difficult reforms at this point to attract the kind of flows we need, rather than try fancy schemes to bring in money.
One final question, since you said maybe there's an opportunity here in adversity. What about long term planning for our energy reserves? Is that something that India now seriously needs to look at? How long will we continue to be dependent on imports, and how do we build those reserves at home instead?
Well, for want of a dramatic find, and we've been trying for many years to look in the Indian Ocean and so on. Let's say we don't find oil, and certainly we should continue our efforts. I think the clear answer is nuclear and sustainable energy sources like wind and solar, uh, uh, which also means that the accompanying production of solar cells, windmills, but also of battery storage. These are areas that we will get depend a lot on going forward, and it's something that our industry must focus on to come to the state of the art in these, because our needs will be enormous, and being dependent on other countries for these needs certainly could be a vulnerability that we have to worry about. So I do think this is a point to reflect on energy strategy, but also I think transferring some of our foreign exchange reserves to build buffers in energy might also be useful, whether it's natural gas storage or oil storage. Uh, could we move more to 100-day, 120-day storage levels rather than whatever levels have been talked about? So there certainly is more we could do given the vulnerability. We have to be careful about overreacting. That do some on those dimensions, but also keep the long term plan in mind. And the long term plan is to move towards more sustainable sources of energy. They're also more distributed, less line losses, etc. if we spread solar around. So let's do that also, and start thinking about how we can produce some of the green infrastructure and sell to the rest of the world. And that requires boldness, innovativeness amongst our industry, which I think also it's high time they stepped up.
Well, Dr. Raghuram Rajan, thank you very much for your perspective on this. I think the message is clear. We should be prepared. I think all of us have to be prepared for some short term pain, short to medium term pain, certainly on the economic front. And we'll have to see how long this goes on. Thank you very much.
Absolutely. Thank you.
And we'll be back with much more on the US Iran war and its impact on India next week. Do join us then.